Hey, everybody. It is February 2025. We are in tax season officially. So I know most of you are probably scrambling, trying to get those receipts together and getting those deductions together. And as you're trying to scramble, you're thinking, what in the world can I deduct? So I'm here to help you out. So by the end of this video, you are not going to leave any money on the table. It stops today. So, you know what I'm going to ask you to do? Go ahead, pause, go get something to write with, get your iPad or whatever you got you're going to take notes with, and let's. Welcome to the From Chaos to Clarity Unleash Your Business Potential podcast. I am your host, Sonja Jones of GIP Financial. So this to be out your money. And I just want you to see I'm wearing the brand today. And if you did not know, GIP is an acronym for Get in Position. So that's what we're doing today. We're going to get you in position with these tax deductions. So we are talking about the commonly missed tax deductions on this podcast. So I hope that you already got your pen and paper and stuff together. And we are going to get into it. So when we're talking about tax deductions, the two words that you always have to keep in mind are ordinary and necessary. The IRS defines ordinary and necessary as follows, and I copied it straight from the IRS website. So here we go. So from the IRS, an ordinary expense is an expense that is common and accepted in the taxpayers, which is your trade or business. Okay. So it's got to be common and accepted in your trade or business. For GIP Financial, since we do bookkeeping, accounting, that type of industry, one example of an ordinary expense for us would be like client portal software. If we use an online database to keep all of our clients' data in when they send us statements and stuff like that, that's ordinary for our business, right? So be thinking about what's ordinary for your industry, okay? A necessary expense is one that is appropriate for the business. Okay. I like to compare the ordinary and necessary. Ordinary is like, specific to the industry. Necessary to me is kind of like a universal, right? For the business. So that an example for necessary would be advertising for me, right? So think about necessary is like what most businesses would need for their businesses to run. Bookkeeping and accounting, that's a necessary expense. There is no business that can survive without good record keeping and books, right? Any type of particular like general outsourcing, again for like advertising, bookkeeping, um, and I'm trying to think of another one off the top of my head. Um, can't think of one, but you get what I'm saying. All right. But also, too, again, I've mentioned this before. If you still don't kind of have a clue as to like what the IRS deems as a deduction, I want you to go to irs.gov, look for the Schedule C form. And in the middle of the Schedule C form, it's going to show you kind of what the common, deductions uh, for businesses are. Okay, this is to give you a hint, but like I said, that's going to be pretty general. Most of those that you see are going to be kind of like what we call the necessary expenses. But I also want to read this little caveat as well from the IRS. Although many common expenses are deducted on designated lines of the tax schedule, which is the Schedule C, some expenses may not fit into a particular category. Okay, so if you're not sure, ask your tax professional and do your research. We get too many things like ChatGPT, Google, ask your tax preparer. Y'all, if it's on social media, I'm going to say it again. I'm going to shout it to the rooftops. If it's on social media, you can follow me on Instagram, GIP_financials. Message me or tag me and ask me, is it true? All right. If it sounds too good to be true, message me and ask me if it's true. So I want to research it. I'm gonna run it by Latasha, and we're gonna make sure that it's sound. We found a couple of things that are just out to, even if it's like all the way wrong, or it's just like misleading to the point where people like will just look at it and be like, "Phew, I'm gonna do it," and then you're gonna get bumped upside the head by the IRS. Right? Don't do that. If it looks too good to be true, message us please, and we will take a look at it. But let's talk more about the commonly missed deductions, shall we? All right. So here's the first one. I got how many? I got one, two, three, four, five, six. I got six. All right. So the first one is home office expenses. If you work from home, you can only take the home office expense if and use the home office form if you have the Schedule C. So I just want to make sure that you are aware of that. Okay. So with the home office deduction, you're going to take the square footage of whatever your space is that you use for your home office. So right now, I'm in my home office. It's right here behind our kitchen, between the kitchen and the garage. Okay. Then you're going to take the square foot of that, compare it to the square footage of your entire home, and that's going to give you a percentage. And so any expense related to the home that affects the entire house, you can deduct that based on that percentage. So if your office is 20% of the square footage of the entire house, your utilities, you can deduct 20% of it, your internet, right? If there are any home repairs that affect the entire house, first thing I can think about is like HVAC, because you need air conditioning and heat in order to, operate your office. That's going to be, tax deductible. However, if there are anything specific to the office, like if you paint your office or if you had to fix a window in your office or something like that, that is 100% deductible. Okay, but you got to make sure that it's specific to the office. Okay, so that's that. Next, we got business travel, meals, and lodging. Now, I won't say this is probably commonly missed, but it's commonly misinterpreted. That's how I'll say. Right. But just to let you know, most meals are going to be 50% deductible. Okay. But I have the publication. I want you to go to irs.gov and look up publication 463. Okay, because there are going to be some exceptions where you can deduct the full, meal. One example is if you're having like uh, an office party, right? The a general Christmas party or something like that. You can deduct that. I know that there is some stuff floating around on the internet about how you can write off a certain entertainer's concert tickets, right? You better read for publication 463 before you take that advice. That's all I'm going to say, because entertainment in itself right now has is not deductible. You have to be. It's some very specific deductions in there about how you can do that, and some specific exceptions. So make sure that you read IRS publication 463. I've skimmed through it. I've read parts of it. I want to say it's page 14, if I'm not mistaken, where it starts talking about entertainment, and they do have examples. The IRS does provide examples. All right, so y'all get IRS publication 463. Do not play with alphabet boys when it comes to this, because God forbid if you go into an audit, some things they just gonna look at you like this and tell you that's not deductible. All right, so make sure that you look that up. All right. Next, it's going to be mileage. Okay. Make sure that you either have some mileage tracking software like Mile IQ. I'm not a sponsor, they're not paying me for that. It's just one that I know that I use, Mile IQ, or you can keep your little notepad in your car, right? So at the beginning of the year, make sure that you write down like the starting number on your odometer if you don't have the software, and that way you can, because on the tax form it may ask you, for that. So it's just easier to track that way if you start with the, beginning odometer, write down your stuff, and then have the ending at the end of the year. Okay, so be mileage. And here's what I would suggest. When you talk about mileage, anything that you think may be business related, write it down. Start, go from where you started to where you ended up. Okay. And make sure you write the beginning of the odometer reading and then the ending from wherever your destination is. Right? Just write everything down. Your tax preparer will let you know you can do this, you can't do this, you can do this, you can't do that. All right. So just write it all down. All right. Next, professional development cost. Okay. And that includes courses and certifications. Again, ordinary and necessary. Most of your professional development, um, depending, I will say, I know for me, I can't speak for others, but I can say for me, most of the professional development that I invest in is going to be probably necessary because it's going to be around um, advertising, social media, things like that. But if you need coaching, right? Um, some of that, if it's general, it could be necessary depending on what the coach is helping you to do. Some of it could be industry specific, like we have, industry certifications as opposed to, I'm pretty sure you guys in your particular industries have as well. So just make sure that you keep that in mind with the professional development, ordinary and necessary. Um, Another commonly missed deduction, we are on number 5, is merchant account fees. So if you have a PayPal account, a Stripe account, a Square, any of those, okay? And I'm specifically talking about your business merchant accounts, okay? When you get your payout, if somebody buys something from you and it's through one of those platforms, I'll include Shopify in there as well, right? When you get that money in your account, it's considered net because, like, say for example, if somebody bought something from you for $100 and the payout comes to you $97, just for easy math, right? So the gross sale is 100 minus $3. That's the merchant account fee. That $3 in merchant account fees is tax deductible. Any other fees that pertain to the maintenance of that merchant account is also tax deductible. So make sure that you are in your reports that you are pulling your 2024 totals for your merchant account fees and things like that. Okay. So just make sure that you watch out for that. Number 6, our last one is going to be credit card slash loan interest and fees. Okay. So if you have a business credit card, or even if you're using, I know with Shopify, they have like Shopify loans, Shopify Capital, things like that. Make sure that you are recording the interest and fees for those particular credit cards and or loans because those are tax deductible. Hear me clearly. The credit card payments are not tax deductible. All right, so let me run it back to you. If you're using your credit card and you're spending your credit card on office expenses, the ordinary and necessary things for your business, those items are expensed out. Okay, so the credit card payment is just basically paying back what you spent. That is not tax deductible because it's like it'll be like getting the deduction twice. You're just paying it back, right? So when you are spending money on the credit card or using the proceeds from that loan for business expenses, those things are expensed out. Those are deductible. But the repayment of said credit card or loan is not deductible. However, the interest and fees for you to use said credit card or loan are deductible. Okay. All right. So everybody good with that. Okay. So I'm going to run back through the commonly missed deductions. So the first one we said was home office expenses if you work from home. Okay. 2, business travel, meals, and lodging expenses. 3 is mileage. 4, professional development costs. 5, merchant account fees. And 6, credit card, loan, interest, and fees. Okay, so as you're going through your stuff, remember, if it's ordinary or necessary, then you can deduct it. Okay, everybody got that? All right. So I hope that this helps. And if you need more assistance with your taxes and tax, what we call tax preparation, right? Getting ready for your tax filing, we have an online community that you can get access to me and our team, right? For $97 a month. This expense is necessary for your business, getting um, accounting and bookkeeping assistance for your business. Although you will be doing the work, right? We will be there to guide you and give you pointers and all that stuff every step of the way. So it's called GIP Academy. And with GIP Academy and then $97 a month, you get to hang out with us in our Facebook group, ask all the questions you want. We have an online library where we have tons of videos from what we taught in the past. And we are, constantly updating that. Right now, we got 8 modules of information. So for most topics that you have questions about, we've already done a workshop on it, and you can feast off of that. It's self-paced. Okay. And the most important part of the membership is every quarter you get to sit down with us, our team, and we're going to coach you through how you're doing with your numbers. So that means you got to be doing it on a regular basis, right? We're going to look at your profit and loss. We're going to look at your balance sheet and give you guidance on what you're doing right, what we need to adjust, and all that good stuff. Okay. And the even better part about that, you got the bookkeeping expert and yours truly, and you got the tax expert and Latasha Phillips. And then we have staff accountants, all that good stuff. I mean, we have chock full of resources. So that $97 is going to be well worth it. You're going to get that ROI in tax savings and trying to figure out what I can do, what I can't do. You have a protector and a guard in the social media foolery where people talk about you can do everything tax free. You can send that, post it in the Facebook group, say, hey, is this true? And we will take it and research it and pick it apart. Okay. So for $97 a month, you can get your peace of mind back for your bookkeeping and your business. We want you guys to be in a position where you can get the funding that your business truly deserves. All right. So I hope that you guys enjoyed this episode, and we are going to see you on the next one where we're going to be talking about more tax things. And I'm not even going to tell you what we're going to be talking about. So you just got to come on to the next episode. All right. So have a good one, and I'll see you on the other side. Peace. Hey, y'all. Thanks so much for tuning in to the From Chaos to Clarity, Unleash Your Business Potential podcast. Again, my name is Sonja Jones of GIP Financials, your Mr. Miyagi of Money. And look, if you learned something from this episode, don't keep it to yourself. Make sure that you like, that you subscribe. If you have some little nuggets, add some comments to the comment section of this podcast. But most importantly, I want you to share it with your fellow entrepreneurs. We want to share this good old fundamental business finance education so you can have the tools necessary to know your numbers and grow your business. All right. Take care, y'all. I'll catch you on the next episode.